Hello, welcome to the European Open Briefing for Monday, November the 21st. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So it's a fairly quiet start to the week. On Monday, we're seeing most major currencies paring back sharp losses from Friday. The dollar, meanwhile, continues to set new highs. It reached a near 6-month high of about 111 yen earlier today, and this is mainly on expectations of expansionary fiscal policy in the US following the election of Donald Trump as US president, and those expectations have fueled the sell-off of treasury notes, which is pushing up bond yields, and that in return is raising demand for the dollar. Now that has created a bit of a turmoil for emerging market currencies, and that turmoil has had knock-on effects on the Australian and New Zealand dollars. The Aussie is at 5 months lows, while the Kiwi is at 4 months lows. The euro, on the other hand, has managed to bounce back a little bit from 11 months lows from Friday. And we have a bit of a rebound in crude oil. It rose sharply late on Friday, and it's up a further 1% today. And this is on signs that OPEC is nearing a deal to cut or freeze output. So let's begin with the dollar-yen pair. We can see here that it's trading just below the 111 level. It reached a 6-month high of 111.18 yen. The dollar index also set a new high, the highest since April 2003 at 101.48. And this is on the back of markets expecting that Trump will implement expansionary fiscal policies which would lead to higher growth and inflation, and that in turn will lead to it will require a faster pace of rate increases by the Fed. In the meantime, we do have, of course, expectations that the Fed will raise rates in December. The Fed fund futures are pointing to 95% probability that the Fed will go ahead and hike rates at the December meeting. And also, let's see what's happening in the US Treasury yields. 10-year yields are at a 1-year high of 2.364%, and we can see that the fact that it's a 1-year high that has had quite a bit of impact on emerging market assets. We're seeing investors shift their funds away from emerging market assets to US ones, and that's having knock-on effects on the Aussie and the Kiwi. Despite the fact that both the Australian and New Zealand economies have pretty strong fundamentals, they're growing above the average rate of advanced economies. We're seeing a rebound in commodity prices, but despite those facts, both currencies are under pressure from the stronger dollar. The Aussie hit a 5-month low, 0.7310. The New Zealand dollar hit a 4-month low of 0.6983, although they're up slightly this morning. The euro, we can see it hit a 11-month low of 1.0568 on Friday. It's since rebounded back above the 1.06 level. We did have some comments from Draghi last week. We also had the ECB minutes of the October meeting, and all of that is pointing to some kind of action in December. Most likely they will extend their QE program beyond March 2017. We may see some tweaks to their QE program, although it's unlikely that they will cut rates or ease further. We're just seeing basically maintaining their QE program beyond March 2017, but that still signals a diverging monetary policies between the US and the Eurozone, and that's weighing on the euro. And of course we have some upcoming risk events across Europe. We've got Italian referendum in early December and French presidential elections in April and May. So all of that is driving the euro lower, and that's starting to increase bets that the euro could soon hit parity with the dollar, although it's probably too early to to be too sure about that. The pound, meanwhile, is stuck near Friday's lows. It came under pressure. We can see this sell-off on Friday, and this comes after news that the UK Supreme Court has invited Scottish and Welsh government lawyers to attend the Brexit hearing, and that's related, of course, to the High Court ruling that said that UK government cannot trigger Article 50 without getting parliamentary approval. The UK government is appealing that ruling, and the fact that Scottish lawyers will be involved in the appeal, it could lead. It basically reduces the odds that the Supreme Court will rule in favor of the UK government, and if that's the case, then it could lead to further uncertainty, further delays over the Brexit process, and that's weighing on the pound. Let's move on to crude oil price now, because we're seeing that sharp rebound in crude oil. It had come under pressure last week initially, mainly from the stronger dollar, but we're now seeing some more concrete signs that OPEC is nearing a deal. The Algerian energy minister said on Friday he's optimistic of a deal following discussions between OPEC and Russia in Doha. Russian energy minister also is sounding optimistic. He says that consensus is emerging that his country is considering an output freeze of 6 months. And today OPEC members are gathering in Vienna to finalize the details of the agreement, and that's pushed up crude oil prices today. US crude is up above $46 a barrel. If you look at today's calendar, you can see that it's a very quiet day. We already had the major data of the day, and that was Japanese trade data. It was rather disappointing that Japanese exports fell 10.3% year-on-year in October. That's worse than the minus 6.9% in September. Expectations were for 8.6%. But the yen, of course, is already under pressure from the stronger dollar, so there hasn't been too much of a direct impact of that. Later in the day, we're going to have Mario Draghi, ECB president. He's going to testify in the European Parliament. We're not sure whether he's going to mention monetary policy, but it is looking a fairly quiet week. We do have Eurozone flash PMIs coming up later during the week to look forward to. But I guess the key highlight will be on Wednesday, where the FOMC minutes will be published of the November meeting. And even though we do expect a Fed rate hike, I guess the FOMC minutes could give that final confirmation that they will hike rates in December. So that's it from me for today. Thank you very much for watching, and have a great day.